Hello everyone, welcome to our webinar. Today, once again, is all about gaps, but in a trend analysis. So this is a different not precisely a different topic. Is gaps once again, but I would like to combine it. I decided to combine it with trend analysis. For anyone that is actually interested um, on including in its existing trend analysis. If you're a trend traders, obviously the importance of gaps as gaps form an important part of price action, and they could be form an important part of your trend as well. So before we officially start, as usual, I need to go through the disclaimer warning. Okay, please please give me feedback in regards to the audio and whether you can see this, the slides and etc. And a quick reminder that this webinar is recorded, so if you cannot stay here for the full length of the webinar, you will anyway receive a recording afterwards. On the handout section, I have also uploaded the PDF version of this webinar, so feel free to download it. So, this material provides general market communication for information purposes only and does not constitute independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk, for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure on our website along with all the legal documentation that you might want to check, guys. So everything's on the website. Feel free to have a look. So as usual, webinars@hfm.com is our email address, so feel free to send an email and ask anything you need. We are here to help, so it doesn't necessarily need to be about the particular webinar. It might be for your strategy, something that you're struggling with, and so on and so forth, okay? So I'll go straight to the, it's a bit of a fast webinar today since we cover the last two sessions a lot about gaps, okay? So today is mainly the application of the combination, let's say, in the trend analysis. This is pretty much it. So we might finish earlier than usual. So just a quick reminder in regards to a briefing, let's say, a resume of gaps. A quick reminder for anyone that wasn't here in the last two sessions that gaps, they are, like, we could say that at least from the retail sales, sometimes they are largely ignored, but they are considered to be essential and significant in a trading strategy. So they can give us, in a sense that they can give us a lot of clues, a lot of information in regards to the price movement and the market trend. So the gaps is based on what the name is. They are actually gaps in the price action. So it's pretty much a representation of shifts that we have in supply and demand dynamics. So the imbalance that we might see between buyers and sellers, and that is leading to a broad price movement. So important in your trading, guys, is always to question yourself, what kind of gap do I have? The size of the gap, the occurrence of the gap, because these are things that varies, and these questions will give you answers that will be very helpful for your trading and your strategy in general. So we have small gaps that span a few price levels to large gaps that cover several percentage points. Yeah, so also, as I repeated last time, gaps could be occurred in all markets. However, they tend to occur mostly often, okay, in the equity market rather than forex, for example. Okay, something that we see in the current and not so often in the currency market. Um, so yeah, we can move on. At least any questions, feel free to stick them on the question box, okay? And actually, no one gave me feedback in regards to the audio and the visual side of this webinar. So please, a quick yes, no, whatever in regards to audio feedback, just to make sure that I'm not here alone. Someone can hear me. See my screen. Thank you, Zoran. Thank you. So, okay. So, a few things because Zoran was here last time as well, so you can recognize that I have repeated some parts of some of the text, just a bit of an intro for anyone that it wasn't here before. Okay, so yeah. As we said, is the discontinuity, the discontinuation, or this gap, this hole, whatever you want to call it, between the prices. Okay, this is pretty much it. However, as you know, markets repeat itself, and as such, gaps acts like a magnet, especially for the market participants, because eventually uh, uh, sooner or later on we'll see the price always returning to the gap and fill it back. Okay, so it acts like a magnet. So price always returns to the gap. So also, what else I wanted? Okay, so also something that is correlating also with the particular topic, to the precise topic of the day, is the fact that gaps can confirm the beginning of a new trend or affirmation of an existing trend. Okay, so it could be an alert for you guys of a potential trend continuation, trend reversal, or a sign that the existing trend has further is not running out of steam. There is still some bias, and it could continue in the same direction. So, okay. Let me move on a bit. So gaps, as we mentioned last time, it could happen because of several reasons. It could occur. They can occur due to fundamental, but also technical reasons. Okay, But okay, obviously the topic of the day is mostly about identifying and trade them. But there is some repetition, let's say. We can see, for example, in the currency market, visible gaps that may occur during the weekend. Since, as you know, the currency market traded all day long for 5 days a week. So, so the resumed gaps will probably look like giant candles, but still, it is a gap, and still we need to investigate it further to check whether it can give us any clues in regards to the immediate future, the imminent future of that particular currency asset, that asset, let's say. So, in regards also, the asset class that we can see mostly and very often to see gaps is equities, okay, equity market, because of earning announcement. Reminder that we are going through an earning season. It might be also on a split, okay. It could be when there is a rating of a company by survey institutes or analysts, upgrades, downgrades, or it could be news, of course. Any news, might be political ones, it might be tax announcement, it might be anything that affects the corporate sector. Okay, so are you okay so far? It was a bit of an intro, okay? Now we are going on in the actual gap trading in a trend analysis. Are you okay so far? Anyone? No one. Okay. So far, so good. Okay, thank you, Nicole. So let's move on. Okay, so let's move on. Trend gaps and reversal gaps. So just to clarify, trend gaps, I'm referring to the gaps that confirm that we might see the trend continuing on the same direction, that give us an assurance, a confirmation that the price will continue in the same direction of the existing current trend. So obviously, this gap exists in a it will be seen in an existing trend. If we don't have any trend, we have a range market, then we this cannot be mentioned as a trend gap. Okay, a reversal gap is when yes, Nicole, yes. Everything that we learned in the last two sessions is still on. Yes, it could be in a format of a breakaway gap. It could be runaway. Yes, exactly. Um, yeah, not exhaustion gap. Exhaustion gap, you understand that presents reversal, so it goes on the it is a reversal gap. But I'm not gonna concentrate today on spotting. I mean, categorize gaps. I mean, saying, oh, we have a breakout, a runaway, exhaustion. Is more of a less to apply what we learn on the actual trend analysis. I think for you it will be easy busy because you have seen the last two webinars, so I'm not sure whether it will be helpful further for you. But yeah. So yeah. So trend gaps, same direction. So what it will give us, it will confirm, it will affirm or accelerate. Reversal gap is when the price gaps in the opposite direction of the current trend. So it gives a sign of reversal, which is something that we often found at the end of a correction phase as we have seen the last time. So today, dear Nicole, since you mentioned breakout, runaway, I mentioned exhaustion, etc. Today, we're not going to go through them again, but we're going to speak more about inside gaps and outside gaps. Inside gap could be in a form of a breakout, could be in a form of a runaway gap. I will explain a bit, okay? So here, okay, we have outside gaps as well, outside gap, but okay, firstly, let me just, before we go to the actual example, let's speak a bit about inside and outside gaps, what we mean by that. Okay, so by saying outside gap, we're referring to the gap, okay, that occurs when we have a market open outside of the previous day's range. Okay, again, when we have a market open outside of the previous day range. So it occurs when price opens above or below, so above the previous day's highs or below the previous day's low. Okay, so let me show you how it looks like. Give me a second. So this example has several outside gaps. Okay, so above, you see, above the previous highs. So it's not a matter of open or close. Sorry, not a matter of open or close, but days highs and lows. So, oops, yeah, here we are. So this is, as you can see, the very first one. Okay, we are covering the outside right now. A gap has been created between the two, which we name outside gap because occur when the price, since the price open, this is the price open, above the previous day's high, not the previous day's close, the previous day's high. So this kind of gap confirm our trend. Okay, confirms our trend. You can see another one over here. Outside gap. Again, the open was higher than the high of the previous day. So indeed, the asset saw another swing higher. Another gap, outside gap. Again, can you see it open over here? Here was the where the market actually open, and it was well above the previous day's high. Okay, the size of the gap also matters because it can show us the need of a fill, the need of a temporary limited correction, and so on and so forth. Okay, because if the, as you can see, that doji candle that it was occur after the gap, it suggests the extreme condition, the overbought condition, and the size of the gap in combination with the size of the gap, indeed they affirm that the upward trend will continue. However, they also give a sign that in the short term, we might see a small correction before another attempt to the upside. So this is what we mean by saying, outside gaps. Okay, so as I said, these are confirming a trend, usually happening in concert with an acceleration of a price action. So gap and go. So when these are happening, as I said, might happen to earning releases, once the market opens, actually after the earnings have been announced. It might be Fed announcement, it might be a dividend or a stock split, it might be news related with the underlying asset. So Natasha, so let me zoom in a bit. Is when, so for example, this one is something that we didn't covered, but as you can see here, we are in a downtrend, right? Sorry, let me mute a bit the, okay. So this is clear that there is a sharp sell-off, right? So, okay, I will ignore a bit this gap because we couldn't tell whether we are in a trend or not yet. It was at the beginning of the trend. Even though if you have spotted this outside gap, you could say that, oh, you could figure out that we might see a new trend developing, and this is a downtrend after this big sell-off and another sell-off in the following day. But let's ignore that. Let's move on to the second one. We already knew that for 1, 2, 3, 4, 5 days in a row, the asset was pulling back and it was in a decline. So what we have over here, we have a gap because the open price was below, was above. No, this is an inside one. Let me find a better example, actually. I'm sorry for that, Natasha, give me a second. A second, just not to confuse you guys, not to confuse you based on what is an inside and what is an outside. So this is a more appropriate, because this is an inside gap, so which is something that we'll explain in a bit. This is an outside gap. Why? Because the price after the gap was occurred, okay, the open price, okay, the open price, it was below the open price is this one, right? It's clear. Is this one, not this one, is this one. The open price was below the previous day's low, not the previous day's close, the previous day's low. Let me try and find. So this was a sign that the so far decline for 1, 2, 3, 4, 5, 6 days, 7 days in a row, the sharp sell-off will continue. Okay. So by selling over here, once you identify that outside gap, and by doing an appropriate risk management, not too tight, not too close with your entry level, you could have benefit all these dip, all these distance, all this decline extension to the downside. Another outside gap is this one. Again, the open price of the new candle, it was well below the low price of the previous day. Another sign that we are not, we haven't reached the end of the bottom yet of this trend, that there is further steam to the downside, and indeed it extended for 2 consecutive days to the downside. Okay. Are you okay now, Natasha, what we mean by outside gaps? Outside gaps, if we spot a gap and the price opens, if we are in a downtrend, if the price opens, let me just put the wording again back so you can see what I'm talking about. Here it is. If we are in a downtrend, then if the price opens below the previous day's low, then we say this is an outside gap and this is a confirmation that the asset will continue in the same direction. If we are in an uptrend now and we see the price opens above the previous day's high, that's a sign that the uptrend has further um, um, support. It has further steam to the upside. So okay, we'll come to this example in a bit. For now, let me actually let's focus on this one. Yes, let's focus on this one. Give me a second. Okay, so it's not a clear example, I'm afraid, but let's check that one for now, okay? So we have spotted, just, okay, first of all, let's do this, Over here we had an outside gap, okay, an outside gap. Okay, so there was a decline, some consolidation, so we can call these over here, this second one, as a breakaway gap as well. But still, so a breakout outside gap, we can name it, because the new candle, the open price was well below the previous day's low. So this is a breakaway, but also an outside gap. So confirming the existing downtrend. Another one over here, with the market open well below the previous day's low. So extending further and make the bearish signal even stronger than it was already. Okay. And in general, we have seen continuous signals in a format of gaps, confirming that the particular asset was in a sharp sell-off. So it was that one. Okay, that was the very first indication, but it wasn't clear whether it would last. But these make a bit the bearish scenario certain. So 1, 2, 3, 4, 5, and so on and so forth. All of these are outside gaps. Now, the asset eventually had a pause. It found some kind of a floor, and we can see the floor because for 3 consecutive days, you can see that it sustained this floor over here, with eventually 2 bullish candles following afterwards, and a bit of a correction over here, okay, exactly on the previous gap session. So this is area, sorry. So this latest gap over here, this outside the latest gap over here, was reacting right now as a resistance level, guys. And why as a resistance level? You can see that because we had a nice bounce, but exactly on the previous gap. So we can see that here there is some ceiling with bears defending this area. Okay, so and it forms some kind of a descending of a triangle from that moment onwards. So it was, if I let me try to draw. Oops. Let me try to draw. So by connecting, okay, that was a nice resistance area, okay? So, but no, I don't want to confuse you. Erase it all. Just to draw for now. This looks like a triangle. Oops. Ah, perfect. So from that moment onwards, I will zoom in. Come on, Andrea. Ah, how can I zoom in? From that moment onwards, it was like tumbling and moving within a channel, a triangle, sorry, more precisely. So for long-term traders, okay, I don't know what kind of traders you are, but for those people that they were looking, they were monitoring this asset back then, it was like it wasn't a clear outlook. It was like a neutral one, so they couldn't really tell whether it will eventually continue and enter again a bearish market, or whether we're gonna have a nice decisive um, bullish market. It was neutral. It was moving sideways pretty much in a triangle until it eventually break out the triangle. Okay, so it rebounded with a gap occurred 2 days after the rebound. Okay, extended and retested the top of the triangle, struggled though to break it until eventually we have a breakout and a closure above, outside and above the triangle. So that was a very, very first sign that something is changing. At least in the short term, we had a trend, the beginning of a trend with 1, 2 bullish candles, outside gap over here, followed by a very strong decisive bullish candle, consolidation and another swing higher with another outside gap as well. So in the short term, we could see that a bullish trend began. So you can, so what I'm trying to say over here is that even though the overall picture is not clear, if you spot these kind of gaps, this is something that could help you in your near-term analysis. Okay. Okay. So this swing high, these swings actually, we had one swing here, one swing here, lower swing, another swing lower than the previous, and until eventually it got out of the triangle and posted a higher swing high in compare with the previous ones. Return back, lower again, form some kind of a triangle over here, but until, I mean, as we move onwards and we move forward, you can see that these gaps that were spotted, they could have helped back then the short-term traders benefit on these limited swing highs and limited swing lows, and so on and so forth. So you can see outside gap, outside gap. This one, I'm going to explain what this is in a bit. Outside gap, a breakout, and another breakaway in a breakaway formation again, because if I zoom in, you will see that the market was moving sideways for 5 days in a row. So this is a breakout, gap, breakaway, and outside gap. Sideways, 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 move higher at the top. It formed another outside gap above 2 swings. So this suggests an acceleration of the trend. So, so let's stick a bit on this gap over here. So what we have over here? Sideways, sideways, sideways movement, and eventually some higher highs, higher lows, okay, until we reach that territory over here, which, by the way, it was pretty much on the same level as the previous swing high, okay. So that was an indication of a key resistance in this area. But what do we have seen over here? We have seen a bullish candle breaching, let me zoom in further, a bullish candle, and then the following candle open above the previous day's high, but quickly turned lower. This is still an outside gap, because remember, outside gap is when we see the price opening above the previous day's highs. So there was indeed an outside gap. You can tell me, but Andre, I cannot see a gap. Yes, you cannot see a gap in this daily chart, but if you go one scale lower in the 4-hour chart or even the 1-hour chart, you could have clearly seen that gap. But as such, this one, yes, since we had the price open above the previous day's highs, regardless on how it closed, is still an outside gap. Are we clear? Yes, there are a lot of examples, but they need some time to be monitored, examined, and understand, and in order to understand them. Okay, there are a lot of examples in this slide, so please download them, and even print them if you have a printer or something, and go one by one, check one by one, because they have a lot of informations on. So that's why we don't have a lot of theory today. It's mainly examples, mostly examples. Um, Especially now with the earning seasons, these are things that you will see definitely. And I'm brave enough to say definitely, because, for example, I was checking Microsoft earlier, and we had many inside and outside gaps within 2023, even on the second quarter of 2023. So it would be good if you closely read carefully read the slides, okay, especially now with the earnings. Okay, so this is an outside gap above two swings. So that, however, presents an acceleration of the trend. What happened though? Sorry. By saying acceleration of the trend, I'm referring to the to the sign that something significantly changing, if I can say that. So in this case, though, as you can see, the asset started to decline, right? Started to decline. The fact that we have seen this outside gap at the same level as the previous swing high, okay, and the fact that so look at that gap. So can I draw gap? If I draw a line, let me actually draw a line, try and draw a line. So you cannot go blind. What I'm trying to say right here is you cannot go blind and say, okay, I have an outside gap, so I will go long. I have an outside gap in a downtrend, I will go short. No, you need to double check, because yes, this is indeed an outside gap if we can tell it's an outside gap in a market that is posting overall higher highs. So overall, this is some kind of an up channel, not with a significant slope, but still an up channel. However, the fact that this so it's an outside gap, so we can claim that okay, the asset is moving higher and higher. Since the bottom that we have seen in March. So that might be an indication that it will eventually it will continue to the upside. However, the fact that this outside gap has been seen at this resistance area, let me just highlight it. Okay, it's not a straight line, but I think you can spot it. So it happened exactly on the same area as the previous swing high, and this gap. So this is a key resistance area. We have an outside gap, which should mean that the rally will continue, because we had been in a rally so far, right? But at the same time, we are on a key resistance level with the candle that followed the gap to close to be bearish, decisive one, big bearish candle closing below the previous day's bottom, and another one followed, extending further to the downside. So that was an indication that yes, we might there is still an indication that this 1, 2, 3, 4 months appreciation might continue. However, in the short term, the fact that we have this reversal and this gap occurring at the resistance area with two consecutive candles extending lower, it was an indication that regarding of the continuation signal that we have in the near term, though, there is a reversal. Okay, so I want you to judge it every single time, to judge it. Don't just stick on, okay, we have an outside gap. Oh, it always means that. Yes, it might mean that, but it might also alert that in the short term, you might have a decisive pullback before another attempt to the upside. Okay? Eventually, okay, after a decline in a form of a downwards channel, and why I'm saying in the form of a downwards channel is because if I connect the lows, you can see that this is a downwards channel. The asset pose with three consecutive candles finding this floor over here. We have an outside gap again to the upside, retesting the top of the channel. The next day extended the close above it until we have we had a sharp rally and huge outside gap in the form of an exhaustion. Okay, so just a quick reminder that exhaustion is when we have when the price close under the last gap. It is typically a dead giveaway that the exhaustion gap has made its appearance. Okay, we had an uh, let's say, high volume situation that it looks like is presenting an exhaustion gap. Okay, but an exhaustion gap cannot be confirmed, can only be confirmed only if the asset returns, fill the gap, and extend further to the downside. If it doesn't fill the gap and if it stays above the gap, then it's not an exhaustion. It's actually another strong outside gap, okay, indicating the continuation to the upside. So you need to be a bit patient, wait until this until the markets calm down to check whether the decline, the reversal has stopped above the gap, because the fact that it paused and we had consecutive candles above the gap, it was an indication that this is not an exhaustion, so it's not a reversal sign, but instead is a continuation. It's an outside gap, so so it implies to a continuation to the upside. Now, some of the gaps over here are called inside gaps. So allow me to go back and explain what an inside gap is, because we might have in the same trend both outside and inside gaps. So that makes things a bit more complicated, but it would be very helpful for you to spot both short-term signals and medium-term signals. Because as I said, remember, an uptrend, for example, it might last for days, weeks, even months. So by spotting some insight, let's say, gaps within the existing trend, it might give you signs of trading against the trend in the short term, just to benefit on any correction, on any limited reversal, any pullback, and so on and so forth. Okay. There are a lot of examples here, okay? A lot. Again, gap outside the previous resistance in the this sideways move. So a clear trend confirmation, so on and so forth. Now, inside, let's see inside, so we can go back to the examples. So what is in the inside gap? Can you show the previous high on this chart? Which one, Nicole? Which one? The complicated one, the messy one? This one? Okay, this one, I will leave this, I haven't covered this. I want to cover first the inside gap, because we have a lot of inside gaps over here. We have actually also inside gaps and exhaustion gap and island reversal gaps and so on. It's a more complicated example, so I would like to cover first what is an inside gap before we come back to that example, because it's the most, it's the most complicated of all. Okay, so inside gap. What we mean by inside gap. Inside gap is the gap that is created when the price opens inside of the previous day's high or low. Previous close to new opening. So let me draw actually. I should have done that. I should have drawn you the inside gap, but actually there might be still time. Let me add a picture so that I can help you with the inside gap. No. If I go back and forth. Come on. Give me a second, guys. Yeah. Okay. Okay, perfect. So this is what we call inside gap. So let's take the first example. So it's the comparison, is the gap between the previous close, okay, and the new opening. So what we have over here, we have obviously decline, right? Guys, gaps could be found anywhere. It might be in any kind of time frame, but as usual, stick on one time frame, okay? And if you want to, you have spotted sign, a short-term sign, you can go one scale or even two lower, not more than two. So my examples are daily ones and weekly ones, but it's just for the sake that they are good examples. It doesn't mean that you cannot find gaps, any kind of gaps, inside, outside, the breakaway, exhaustion, island, etc., in any time frame. But stick to one time frame. Don't spot a gap in the 1 minute chart, 15-minute chart, and go down to the 1 minute chart to trade it. This is the case for any kind of strategy, okay? Any kind of strategy. Stick on what you see, on the time frame that you see it. And if you want to confirm something, confirm what you have seen, you can go one or even two scales lower just for confirming or spotting your entry, but that's it. So, what I wanted to, yeah, so inside gap. So what we have is the one between the previous close and the new opening. So when we are we will have consecutive bearish candles or consecutive candles to the downside. If we see the price opens within the body of the previous candle, okay, so inside, somewhere inside the previous day's high and low, then this is an inside gap. Okay, in a bullish market, in a strong market, we will see again the new open to be within the previous day's territory. Okay, so this is the inside gap. It's something that we might see even more often than the other gaps, the other gap types. So inside gaps tend to be filled within that current day trading activity, and you can clearly see it has already been filled. That is, let me just go back to the let me find an example. Okay, I don't know why, but I cannot see one over here right now, but yeah, there should be one for sure, but I have examples, so let's move on. So as I said, inside gaps tend to be filled within that current day's trading activity, and they can provide good day trading signal. So it's a more the short-term signal, we can say. So it can provide a trading signal for that particular day and time, etc. So especially for you guys that um, especially the gaps that the inside gaps that um, they are the ones with our trend. What I mean, for example, if we are an existing uptrend, when we see an inside gap like this one, then we'll see that it will be completed within the same day, and it's a good a good entry signal as well. So they are okay, they cannot be easily spotted, not like the actual gaps, the outside gaps, which is a clear miscontinuation of the price, because it's because they're like that. It's more it's more difficult to be spotted. So this is an example of an inside gap. Um, so previous days close, okay, previous days close, next days open, but indeed you can tell me, but Andrea, is not within the body. I didn't set to be within the to open within the previous day's body. I mentioned to open within the previous day's high and low. So this candle over here is the high, here is the low. So indeed the open, the next day's open, it was within the previous day's area. So this is still an inside gap. Inside gaps are difficult to be spotted, but they can they are very useful because they can sorry, I lost a bit my I ran out of steam a bit. Sorry. Yeah, so as I was saying, they are useful for spotting the continuation or the reversal of the of the existing market, and they actually tend to sign a reversal. Okay, it's a sign of a reversal. So let's check some examples for you to understand how inside gaps could be useful for your trading. So let's move on. So as you can see over here, we have seen this gap which followed with a massive sell-off over here. That's a huge candle, and I'm sure you can clearly see it. But indeed, it's not only that, guys. You need to learn to combine stuff. Okay, it was not easy to spot this kind of an inside gap, but once you did, if you did, you can see that also it looks like a head and shoulder. It's at the top of the head. The asset consolidated, it had some kind of a support over here, like the neckline of the formation, of the head and shoulder formation. So, okay, it was a big sell-off. finding a floor at the previous bottom, consolidating, another swing high lower than the previous one, another sell-off at the bottom of the at the support that we spotted days ago, and a head and shoulder formation in combination with an inside a gap. Remember, an inside gap is a very, it might be one of the very first signs that we have for a reversal. Okay, so, and this is what indeed is the case. Look at that. It took days. I'm not saying that it's something that it can happen ASAP. It might take days, but it's something to make you add it in your watch list and monitor it day after day until you spot the most appropriate sign to enter, or at least until you found the confidence to follow these signs. Okay, eventually we had another outside gap that indeed confirmed the fact that we have a downtrend, and we have a new trend and it wasn't downtrend. But it wasn't only that. It's what I said. It was the inside gap. It was the formation of head and shoulder. It was the breakout of the neckline of the head and shoulder. So how many signs we had? Okay, we have one over here, the inside gap. Then with this third swing, we could say, okay, this looks like a head and shoulder. It wasn't formed. It wasn't confirmed though. It confirmed with this two doji candles below the neckline, so it was another indication of a bearish formation. So second, it was the head and shoulder formation. Third, it was this outside gap to the downside. Three signs confirming that we have a new trend and it's on the downside. Okay, you can tell me, but it has quickly lapsed. No, it didn't. Okay, we have a correction, but we failing to complete the full gap. And actually, the particular asset, I don't know if I have the follow-up, I think I do, it continued to the downside. So there was still, after the outside gap, there was still some room to the downside. Nonetheless, let's go back to the previous examples. This is outside, outside, outside. No, let's go to the complicated one. The one that Nicole asked, oops, because it's the one that has a lot of examples about inside and outside gap in a single asset. Until now, would you consider the breakout of the neckline an inside gap? Would you consider the breakout of the neckline? Is it really? Did I miss it? Let me double check, Nicole. If it's indeed the case, then you have a very good eye, my friend. Let me double check. Let me clear all this mess. Okay. Would you consider the breakout of the neckline inside gap? Oh, wait a minute. And you're actually right. Very good eye, Nicole. Very good. Did you spot, guys, what Nicole suggested? She asked me, do you consider the breakout of the neckline as an inside gap? Yes, indeed it is. And let me zoom in so the rest of you could see it. So the neckline, okay, I need to firstly draw the neckline again. Hopefully it will be a nice straight line. Okay, it's not a straight line, but you can understand. And I zoom in, so the breakout of the neckline was that one, right? So what is this? Yes, this is, actually, is it, or is it just in the limit of it? Let me check, zoom. No, Nicole, is not. Okay, it's not a clear example, but the open was here. So it was just a tick below the low price. So it's not. No, I'm afraid it's not. I'm afraid it's not. Yeah, it's not. But it could have been. Yes, it could have been. Yes. Yes, it could have been. You never know. Um, It's not like this one is an inside gap. This one is an inside gap. So we have an outside doji, fully bearish candle. So the first indication was here. Second indication was here. And indeed, a decline followed. So this one is another inside gap. Let me see whether I can spot more. This one was an inside gap. It opened within the territory of the previous day. Yeah, there are a lot of inside gaps actually over here. Nonetheless, the two doji under the neckline. Sorry, my bad. Open here. Open here. Yes, indeed. Yes, indeed. You're absolutely right. So, let me get back to, I will finish with the complicated example. And that will be pretty much it for the day. So it's the time for you to ask any questions that you want. So this is a more complicated one, the one that also Nicole reminded me to go through it. Okay, so over here we had our very first outside gap, okay, which followed, but don't be confused, okay, by writing here reversal of the trend. I'm not referring that outside gap implies to a reversal. No, outside gap implies to a continuation of the trend, but it was the confirmation over here. This outside gap confirmed that the so far downtrend has indeed ended, and we have a new trend established, an uptrend this time. So the reversal that I'm writing over here refers to this one. Okay, the confirmation that. So if I connect, even I cannot do that, but I will try by connecting these lows. You can see that the outside gap occurred in combination with a breakout of a very sharp down channel. So that's why it was an indication, that a confirmation that we have a new trend, an uptrend this time. So it was the very first sign, followed by a very strong decisive bullish candle. This looked like a descending triangle with a breakout away gap, outside gap as well, that confirmed that our uptrend continues. So, and that this was just a correction. Okay, at some point we have an inside gap, but it was largely ignored. By the way, if the next day, the next session, okay, doesn't confirm the gaps indication, it could be ignored. Okay, what I'm trying to see, if nothing backs up, like the example before with the head and shoulders, the neckline, and the inside gap, and etc. The very first sign was the inside gap, and it was backed up with head and shoulder formation and the breakout of the neckline, and follow afterwards with an outside gap. So all this back up our initial inside gap bearish signal. If nothing gives you a reassurance, a confirmation that of this signal, then it was just something that we should ignore. For example, here we have an inside gap. Inside gap, it might indicate the reversal of the trend, but here, okay, here it was ignored. Why? Because the next day we had another boost higher, the following day another boost higher. So there wasn't no indication of a reversal. No indication at all. So this was largely ignored. Okay, and the asset continued to the upside, upside, upside until we have seen a swing high, way higher than the previous swing. Okay, so that was a key question, whether this is the very first sign of a complete reversal of the trend, or whether we gonna have some short-term reversal, just a correction. Indeed, the asset came down, found support at this above this inside gap, but nonetheless, even if it wasn't the inside gap, by measuring this, by putting Fibonacci from here to here, you could see that this was not even the 20% of the latest rally. So this correction, it was small. This pullback was small, so it was clear that it was a correction before another attempt to the upside. So found the floor here. So we had 1, 2, 3 consecutive bullish candle, including an outside gap, confirming that indeed that was a limited pullback, and the existing more than 2 months, 1 month, no, 1 month should be 1 month uptrend. Will continue, that the 1 month uptrend will continue, and that was the confirmation of it. So you see why I'm saying all this, because you might spot these outside gaps and a confirmation of the existing trend, and you might join the trend. But on the flip side, you might also, other than trading the trend, you might also consider additional positions to trade in a lower time frame for a limited time, these corrections. That's why I'm highlighting the need to spot the swings, the pullbacks, inside gaps, and so on and so forth. Okay. The rally continue until we have another swing high over here, which followed, so another swing high, so way higher than the previous one. But in this case, the next day we had a massive sell-off, reversing more than a week's gains and finding a temporary stop on the previous swing low. Can you see that? So that was the very first indication that something is changing. So add it to your watch list, or close. Or guys, something very important. This candle could have been your stop loss area, so your signal for closing your existing position, because the bias is shifting. Okay. Or if you had a trailing stop or something, it will have anyway automatically close. But yes, that was the very first indication that something is changing, that we might have the bullish moment, the bullish trend running out of steam. Something is changing. So that was the very first indication, because exactly after a swing high, we had a massive sell-off. So the size of the candles always matter, and in combination with an inside gap. So swing high, inside gap, and a huge bearish candle. So that was firstly a call to close the existing bullish long positions, and to search for appropriate entry levels on the speculation for the beginning of a downtrend. Okay, but even if you missed this, or you weren't sure whether you're gonna go short or not, you can be patient enough to wait to see how this will settle. Okay, you can see that we had another swing here, but lower. Okay, again, this floor to be retested for a third time in a row, another swing higher, but again, still below the latest swing, followed by outside gaps. You see, it was like a complete reversal. Outside gap, but quickly turned down and went back to this support that it was retested for the fourth time. So now we had a confirmed established downtrend. So the question here was how long it will last. So even if you fail to enter on time, okay, even if you enter quite late, maybe on this the latest outside gap, on the closure of that one, or even on the breakout of the support level, there was still furthest into the downside, with the next target to be seen at the previous gaps or at the previous swing highs or swing lows that we have seen before. So you can use the previous swing highs, swing lows, outside gaps, repeated floor, repeated bottom as your immediate, as your target areas, or your stop loss areas, okay? Price returned to fill the gap, and indeed it did it. It filled the gap, it settled, and then we have consecutive higher highs and higher lows with the establishment of a new uptrend, while the breakout of our previous swing high, it was done with an impressive outside gap that affirmed our trend. Fill the gap, rebounded. So filling the gap, okay, but not breaking below it, is another indication of a continuation of the existing trend for at least for a while. It's both with two last inside gap is both with the two last bullish candle and the last bullish and the first huge bearish candle. Yes, 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 indeed. Yes, indeed, Nicole. So, guys, that's pretty much it. You need to actually spend some time and have a look at this example by yourself, okay? Because they're a bit complex ones. I'm not saying that you can easily spot every single scap, every single signal, every single formation, but the more things the more time you spend on reading a chart, the more um, uh, the more confidence you will have, the more reliable your decision could get, okay, and so on and so forth. So obviously this session needs you to spend time and check one by one my examples. If you want, if you spot anything in your MT4 and MT5, anything, and you want to discuss it with us, please take a screenshot and tell me, okay, Andrea, have spotted these and these and these and these exhaustion gap, island gap, along with I don't know, descending triangle and runaway gap, and what that means. Or I did that and that and that, but I was wrong. What did I did wrong? So anything you need. If you now, because earnings season, gaps are spotted mainly or more often in the equity market, feel free to send me anything you want for any asset that you want, and ask any question that you want. For the time being, I would like you to spend time and check carefully the examples that I have posted on the today's webinar slides. Okay, so that's pretty much it. We are done. If you have no further questions, I will call it a day for today. Okay. Bye, Nicole. Bye. Good luck with everything. Take care, guys. It's a very, very volatile day, week. Don't forget that. Other than the earnings, is the Fed, is the ECB, is the US inflation, is the US consumer confidence later on. Australian inflation, durable goods. I mean, we have a lot this week. So take care. Thank you. Bye bye.